How's it going, everyone? It's Sam. There was a big day yesterday, and I have to throw it out there. You have 24 hours. You have about 24 hours, 48 hours, I suppose, until Monday, where we start to see more inflows coming from the Bitcoin ETF. So you have like 24 hours to maybe start buying because you'll be sleeping a little bit too. But we had just massive inflows this week from for the Bitcoin ETFs, which I want to show you. Also show you a pretty interesting chart that compares maybe where we are now versus where we were in 2000 during the tech bubble. If you don't mind, hit subscribe, turn on the bell notification underneath the video so you can see future videos just like this. Also, let me know what you're drinking down below in the comment section. I'm having a raspberry bubbly. Have to break out another coffee here soon because we were up very early today, been running around, doing all kinds of things. But let me know down below in the comment section what you're drinking. Now, as you can see, Bitcoin's price did hit a higher high recently. Now just chilling out around 65.6, a little bit less volume on the weekends, obviously. ETFs are pumping the markets during the week. You can see just over the week, we went from, what was that, Monday, Tuesday, Wednesday, Thursday, Friday, Saturday. We went from 63 with a low of about 62.4 to 65.5, all the way up to 66.5. So we did have a $4,000 move throughout the week, and this is after we had a big move from the week before. We went from the upper 50s to then the lower 60s. So we are one similar week away from hitting 70,000 or, hitting new all-time highs. Obviously, a lot of shorts would get squeezed. If we continue to move up, a lot of people would have to cover their positions, and then we could see some interesting things happening, especially around that key psychological level of 70,000, then 73,000, or if we even put in a higher macro or higher high on a larger time frame. If we were above that 70,000, everyone, I think, would flip pretty bullish. Now, part of the reason that we've seen a pretty green market this week is because of the inflows. Now, again, if you want to trade this, if you want to put in some long positions in the next 24 hours, 48 hours, and you want to do that before the ETFs are most likely going to buy more this coming week, you can check out the link underneath the video to Margex. You can long the market, you can short the market, you can do it without KYC, and you don't need a VPN to start trading, and you can trade all different kinds of assets. So there's a link to that underneath the video. Let's take a look at what the ETFs did yesterday. Keep in mind that since the Fed started lowering rates, we had nothing but inflows. 158 million, 92, 5, 135, 105, 365 million. Grayscale was the first one in with a $26 million inflow. Okay, that's pretty good. Bitwise, 13 million. ARC-B with a record inflow of 203. Fidelity had a big day with 124 million. And then HODL had an 11 million, Burr 3 million, Invesco 3 million, and then IBIT closed the day with $112 million. So overall, we had a $500 million day, 7,526 Bitcoin, which, if you look at how many days of issuance that is, that's about 17 days worth of Bitcoin issuance was bought up off the market in one day. Now, of course, this can change drastically. This can change with a big selling day, and the markets can turn red. But so far, September has been a pretty green month, and we've seen good inflow numbers as well, with ETFs buying 17.8 thousand Bitcoin this September. It's impressive. That is the entire month's worth of issuance. We're not quite done with the month, but they bought more than the entire month's worth of issuance so far. And yeah, that's why Bitcoin's moving up in price. It's just they're relentlessly buying Bitcoin off the market. Keep in mind too, 99% of Bitcoin will be mined by January 2, 2035. So 10 years and a couple months, 99% of the supply will be mined. Now, let's say we're at $500,000 Bitcoin, still well below gold's market cap, even its current market cap now. But 99% of the supply hit the market. Bitcoin went from a fraction of a penny up to $500,000 when the supply went from 0 to 99%. What do you think it's going to do after that, right? It's just crazy to think 20 years down the road, where could we be? keep in mind, in just a few days, we go into Q4. We're going to start getting earnings reports. Also, the rumor is FTX will start distributing its $16 billion to creditors starting this coming month. Now, I've seen Q4 thrown around. I'm not sure if it starts literally the first day of Q4. But Crypto Rover says most of the liquidity will come back into Bitcoin and altcoins. You're not bullish enough. I do think there's going to be a good amount of money from FTX that gets paid to creditors that will come back into this market. We're at an interesting point where enough people are bullish, but we're not close to where a lot of people think we're going to peak out, that I do think, a couple billion up to maybe 10 billion will come in to the markets. Now, if I had to guess, I think it would be closer to half to $10 billion will come back into the crypto markets, which could really cause the market to rally. So as I said, the ETFs continuously buying a significant amount, especially this week. You can see just a ton. Let's go back here. If they continue to buy at the same pace, we would have another $5 million inflow Monday, 135, 200, another 105, 365, then 500 million. So we would be looking at over $1 billion, close to what, $1.2 billion of inflows, which again, that caused the market to go up $4,000 this week. Could be a very interesting week. Of course, we'll have to continue to watch other news as well. It's not just about the ETFs, but that does play a big role in in the market and how Bitcoin's doing. You can also see this. A lot of people are looking for the next crash. Is the crypto market going to crash? Is the stock market going to crash? And a lot of people are likening this to maybe 2020 or 2000 or 2008. And I do think it's very different. First of all, there are a lot of things that are different, but just some interesting stats. The Magnificent Seven versus the tech bubble leaders back in 2000. Okay, percentage of U.S. market cap, 31% versus 19%. So they do play a bigger role in the overall market. But take a look at this. Their cash position is much better. Cash as a percentage of their market cap, 4.2% now versus 1.7%. So they're in a much better financial position, about 2.5 times more cash. Their 24-month forward PE for the Magnificent Seven, that was weird. I thought that was weird that they do the 24-month forward PE. Makes it look a little bit cheaper. But the aggregate for these Magnificent Seven is 23.9 versus 52 back in 2000. So these are trading at a much cheaper level, and the net profit margin is also much higher of 28% versus 16%. So all these companies seem to be in a better position, seem to be at a lower valuation than where we were back in 2000. Now, I'd be paying attention to this. Obviously, if it gets frothy, if everything goes up and doubles again without earnings really increasing, then that would definitely be cause for concern. But right now, it seems like we're in a pretty good place, and a lot of the stock market returns are led by increases in revenue and profit. And some of it, obviously, is just to do with the Fed lowering rates. That does raise all boats. So that will benefit stocks. That will benefit real estate. It will benefit crypto as well. Obviously, Bitcoin specifically is very closely tied with global liquidity. So as the Fed lowers rates, as China has stimulus, as we get further into this rate cut quantitative easing cycle, you would think that these kinds of assets would continue to do well. Let me know your thoughts, though, underneath the video. Of course, if you do want to trade crypto, there's the link to Margex underneath the video. I appreciate it. Please don't give me too much flack for the 24 hours down below in the comment section. I'll see you all in the next video. Bye.